Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, March 19th, with your grain market morning commentary. Currently, grains are trading steady to a little lower. Corn in the old crop is steady. In the new crop, it's down about 3 cents. Soybeans down 4 to 5 cents, and wheat is steady, maybe a penny or two lower. Corn continues to hold strong, up around the 720 to 725 area. That's the May basis. The 200-day moving average is at 724 3/4. So you hear me talk about this moving average all the time. I think it's a very pivotal level. If we get a good pop with a close above 725, then I think corn has some more upside, perhaps to the 740, 750 area. I don't think that there's much more upside at this point until we see how the planting gets started. So the market's being supported by the concerns over the tight supply, the continuing increase for ethanol, and the strong cash bids. In the soybeans, we're still in a technical correction. It's very difficult to gauge when these technical corrections will end. We're just above the $14 level in the May right now. I would expect $13.90 to $14 level. The market finds some pretty good support. We're going to just have to wait and see how logistics continue to improve or delays continue to be the problem down in Brazil. So we also saw that China is canceling orders from Brazil. That's weighing on the market. This is very typical of China. This is the way things go. They place orders, they cancel orders, the markets react to that. So at this point, we're not seeing any indications that they're going to shift the demand back to U.S. beans, but if they need them and the reason for canceling the orders is because of the delays, then I would expect at some point China comes back, buy some beans from U.S. And again, this big range I've been talking about, $14 all the way to $15. So I think we're closer to a bottom in the soybeans than looking for more continuation to the downside. In the wheat now, we see a slight improvement in the winter wheat conditions, but keep in mind, these are still very low levels. We really have nearly 50%, 40 to 50% of the crop is in poor to very poor conditions. So let's keep that in mind. When the crop went into the ground, it was into dust, and we've only had a slight improvement. So at some point, the balance between supply and demand, we have a good supply, we have rather slack demand, but demand is starting to pick up. Export sales are picking up, and at the end of the month, when we get that the quarterly grain stocks report, I'm certain we're going to see that we have better demand for the feed usage than what we were looking at recently. So I'd expect a shift in there at some point, short covering rally, and wheat should bounce. It needs to get above that 725 level that it tested last week, 735, and then things really start to move. So at this point, there's really no big delays in the planting, but again, we're a week or two away from it really, kicking into high gear. We'll keep an eye on the weather. It's a lot colder, and it is, precipitation-wise improved over last year's conditions, but we're not out of the drought yet. So there's a lot of things that can take place over the next month or so. Keep an eye on the weather, obviously. And that's all I have time for now, but please feel free, give me a call, 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.